Hey guys, welcome to the next video here. I'm going to do one on the pound yen right now. And I'm going to do a quick little webinar, basically going over like I did in the last one on the pound dollar, except I'm going to simplify a little bit for you guys. I know a lot of you guys are new. This will help really take away a lot of the analysis that I did on the last one, and kind of help you guys that are new to be able to hop in the markets, to practice with it, and really kind of understand what you're doing. So before I get started, since this is a live market, I do have to read the risk disclaimer. So just bear with me for a second. Trading for exchange on margin carries a high level of risk. It may not be suitable for all investors. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading. And just know that this video is for educational purposes only. It is not advice or anything like that to enter trades. So with that in mind, let's get started. So again, this is we're going to look at the pound yen right now. So basically, like I said, we're going to dummy it down a little bit from the last one, or I shouldn't say dummy, simplify it down is probably the better term. But simplifying the Forex is the best way to go. So just because if you can learn what I'm getting ready to show you, you will do fine at this. So before in that last video, I started out on the monthly time frame to look for direction, possible reversals and things like that. Then we dropped down to the daily, then to the 1 hour for entries. So here, all you need to really do is, I've already got these on the charts for you right now, but it's kind of the same way on a daily. Just look for your highs and your lows for the downtrend, or your lows to highs for an uptrend. So right here, you can see that it's clearly in a downtrend. Here's your high, here's your low. So what I did is I ran the Fibonacci's from the highest point to the next level. So here's the current AB swing right here. So right here is the extension. Since price retraced up we're still up into the red. We're expected to go down to the red. So I'm expecting price to eventually up anymore to fall at least to the 136.8. If it does retrace any, then if it gets up here into the 786 or 886, then obviously we'll be adjusting our take profit levels down here. So I drew the levels here so that way when I do drop down to the lower time frame, once we get down to this level, I will know that, hey, it's time to, if I'm in a trade, it's time to get out around this area, because once this decompletion is completed on the daily, there's usually some kind of retracement, and that retracement is usually some type of like a Gartley formation. So you get a reverse ABCD swing on a retracement before, even if it does continue to fall. So we definitely don't want to be in a sell position right around here. So with that being said, I'm going to drop down we're going to go ahead and do the 1 hour is what I'm going to show you guys. But you can drop down to the 4 hour, 1 hour, whatever you guys choose. If you're somebody where you got a full-time job and that job doesn't allow you to hop on the markets, during the day to take a look at them and place a few trades, then I suggest you drop down to the 4 hour. If you're in that position where you can place trades in the middle of the day or look at the markets, then the 1 hour will probably be okay for you. So right now, let's drop down to the 1 hour. All right. So the same thing here, just like any of them. You want to look for your high point and your low point on an ABCD, or when we're doing our Fibonacci's for the AB boundaries. So from what I see here, here's your high point. So what I'm going to do is I'm going to run my fibs from this point here all the way down to, it's this point right here. Oops. Now, a lot of you will ask, why am I running to here and not here? Because any type of support level, if you need two to the left, two candles to the left and two candlesticks to the right, and that's considered support level. Resistance is the same thing, to the left, to the right. So the good way to see that is if you take your hand and you look and you put it in front of you, your middle finger is the top. You can see your two fingers to the left and then your two fingers to the right. That middle finger there would be your resistance level or support level. So, and if you turn it upside down, so basically if you turn it upside down, it's the same thing. So to the left, to the right. So that's what this is here. You're looking for two candlesticks to the left, two candlesticks to the right, and that would be your next level that you run your fibs from. So that's why I run it from here and not down here. So the retracement level, you can see here, retracement did come up into the 786, and actually it came into the 886. So right here, instead of this being our decompletion, it's actually at the 18 level extension is our decompletion. So our next level here when we're under fibs is this is the new C, becomes our new A, and we're going to run that over to, where is that? Let's see. Okay, so it will run right here. So that's the next one. And you can see here, price actually hit that completion there. So the next high point of the C is here. So this is our next level. So and it's the most current level. So that is our most recent AB boundary. So there's several ways to trade this. You obviously know that you're only looking for sell opportunities here. So there's several ways to trade. One, you can say, hey, I'm just going to trade at the 618 retracement or the 786. I'm going to take my profit down here. Yeah, you can do that as long as you're consistent with it all the time. Yeah, I mean, you're eventually going to come out ahead on it. But if you want to get into where, hey, I get in the 618 every time, but it retraces the 786 or it goes against me. A good way to do this is once it gets up to any of these levels here, even at the 786, is one, look for counter trend line breaks, or two, look for candlestick formations, or three, look for support resistance, any kind of any type of congestion area right in the level of a retracement. So, for example, right here, price retraced up, and now we got the 618 retracement with a morning star candlestick formation. So this right here tells me, hey, I'm jumping in at that close of this candle right here, this 1 hour. My stop loss can either be at the A, or it can be about 10, 15 pips above this high. So regardless, my take profit is going to be all the way down here at the 618 as long as price does not retrace up. So if you get in right, if you got in, let's say right here at this close, and you set your stop loss just above the high of this high, and your take profit is all the way down here at the next level, I mean, you're over 5-to-1 risk reward. So if you did this on a consistent basis, I mean, guys, like I've been telling you all along, if you're at 3-to-1, you can lose 70% of the time and still come out with a profit. So with this type of entry strategy at 5-to-1, I mean, you guys can. It really helps with the pressure, especially as a new trader trying to win trades, knowing that, hey, I can lose X amount of times, most of the time, and still make money. It builds your confidence as a new trader, and two, it helps with the emotion part, which really goes hand in hand with your confidence. But 90% of trading is emotion, and there's a lot that goes into the emotion part, but this is one of them. So if you gain confidence in it and you lose a trade, you lose 2 trades, you lose 3 trades, guys, it happens no matter how much experience you have. There's going to be times that you lose several trades in a row. That's just the way the market is. You take what the market gives you. But what separates the inexperienced and the experienced is the experienced trader, it doesn't change their mindset. It doesn't change their confidence in their next trade. It doesn't change how they think going into the next market or looking at this next market or the next trade. Nothing changes versus the inexperienced trader will be freaking out, scared to death to pull the trigger again on their next trade. So by having a clear, precise entry strategy is very key to this. And by using this type of entry, you don't have to really sit there and look at, okay, the monthly is this, the daily is this, the hours is this, whatever. You can basically come in, just glance at the daily, see what the most current AB swing is, and look where the projected profit target is. Just so you know, that's all I do, just so I know. But then you come in on the hour, the 4 hour, and you just run from your highs to your lows, and then you find your most recent AB, and then you pick your entry strategy. Another way to do this is, okay, it's retracing up, so I'm going to get my counter trend line, and I'm going to run it up here, right through here. So when it breaks this counter trend line, that's my entry. So right here, normally this strategy here I would have gotten here. With this type of strategy, it's got to break below, close below, so I would have gotten in here. So even with this strategy here, if I would have gotten in at the close of this, I could still set my stop loss just above the high of this one, 10, 15 pips above high of this one. And guys, I'm still right at about 3 to 1. So, and then if price retraces back up, draw another trend line, you can always get into the second and third entry. You can set your stop loss above the A here, and you can have, however you want. You're still at almost 2 to 1. I recommend the bare minimum. I like to see 2 to 1 on all my trades, but the bare minimum I'd ever suggest is 1.5. Now, I have sent trades out to where it's, you guys ask me, hey, it's 1 to 1. Are you sure you want to get 1 to 1? Yes, because the reason why is I've gotten in here. If the market retraces up, I'm re-entering again at another break. That's going to put me at 3 to 1, 4 to 1, or 5 to 1. Even though this one down here might be 1 to 1, if the market doesn't retrace and drops, I'm getting a whole percent. But the way I look at it is, if it retraces against me, and I'm getting in again at a 3 or 4 to 1, or even a 5 to 1, then I'm actually getting in, at I'm risking 2% to make 6%, or 4. I'm still doubling what I'm risking at that point. So I'll never get in a trade at 1 to 1 thinking, okay, that's my strategy, that's all I'm going to risk. If it retraces, I'm not getting it. That's the only time I will get in at a 1 to 1 is the fact that, hey, I'm getting in at a better if it retraces. I've already got my plan. It's part of my entire trading strategy is the reason I do that. But until you are advanced enough, until you have traded enough to be able to recognize that and see that, I don't recommend you doing that. So, but with this way, like I said, so let's recap. When you find your most recent AB swing, you can either get in a counter trend line break at the close. Like I said, on a downtrend, it's got to break below, close below. Then you get in at the entry. You can set your stop loss either 10 to 15 pips above the recent high or 10 to 15 pips above the most recent A. Take profit is always going to be at the 618 if it's red to red, but then if it retraces up to the 786, it's blue to blue, green to green. That's how I set my profit targets. The next one would be a candlestick formation. This is a morning star. You got evening stars, the same thing, but it's reversed if you're going bullish. You got your pin bar formations. You got engulfing bullish and engulfing bearish candles. If you guys don't know what the candlestick formations are, I suggest you can look those. There's free stuff on there, and I can send them to you. I highly recommend just looking at the basic candlestick formations to learn, because that is a reversal formation there. So, and not to mention that happened right at the 618. So that is just more confirmation that this is a strong reversal. So not only would I have gotten in at the close of this candle right here, but I would have gotten in due to the fact that it happened right at the 618 retracement. I would have gotten in right here. My stop loss would have been 10 to 15 pips up above this, and I would have gotten in again because then once I got in here and broke this counter trend, I would have got in a second order here. So I'd have risked 1% here to make about 5%, and then I'd gotten in at 1% here to make another 3%. So I would have risked 2% to make 8% just on this entry strategy alone. And then another one, if you don't use candlestick formations and you don't have you don't want to use the counter trend breaks, and you want to just use Fibonacci, then the one reason I would say is don't just jump in because it's a 618 or 5038 retracement or even the 786, but do it if there is other areas of telling you to get in. Just like, for example, right here at the 786, you've got this resistance level right here at the 786 level. So that's telling me right there, if price did continue up, it's got a higher probability chance of hitting this support or resistance level and falling back down. Another reason why I would have gotten it at the 786 level. Now, if I ever get at the 786 level, my stop loss is going to be above the A. I won't put it above the high. It'll go above 10, 15 pips above the A, and then my stop loss or my take profit will be down here to 272, and sometimes I might even take my profit right at the 0 level. So, but honestly, this is a way to take what I did earlier and simplified it for you guys. That way you do not have to go through the multiple time frames. Just hop over to the daily just to look to see your most recent A-B swing. That way you can see where the profit target is expected on the daily, and then drop down to the 4 hour or the 1 hour to do the same thing, and then that's where you're going to place your entries. This here will really help you guys. It's extremely profitable. It's extremely accurate. You guys can win, or you guys can enter the market with confidence on this. I do highly recommend when you do this on your own, just like with anything, don't jump in on a live market trying to place your own trades until you practice it, until you go back test it, forward test it. Don't just back test things, forward test it. And the best way to forward test, guys, is to move it all the way over like this. Find your low point down here, but move the mark all the way over. Run your fibs from your high point. That way, just pretend like the market hasn't even happened yet. And that way, because it's really easy to look at, oh, yeah, okay, here, yeah, I'll take my profit right there. It's easy to see what's already happened. But if you can practice by doing when you don't know what's next, and you can run your fibs and be like, okay, where would I get in? Where would I run my stop loss, take profit, and track it and see how you do. That's, treat it like it's the live market that hasn't happened yet. To me, that's the best way to forward test. Well, forward test also the live market, but to forward test something that's already happened is to go through to back test, go back and do it that way instead of seeing what's already happened. Because it's really easy to go and say, yes, I would have done this when you see that the market has already reacted. But when you haven't seen how the market's reacted yet, you're going to learn more that way in with a live market. So, guys, as always, chat, send me a chat message, email, text me, call me, whatever you need if you got questions on this. But this is an excellent way to trade this market. It's an excellent way to do it without complicating it. I'll continue to do videos like I did before, just so you can. It's always good if you can look at this market. If you can clear this screen off right here, if you can come in here and take all the drilling tools off, and you're able to look at that market and you're able to see it and you're able to read it, it's just going to make it much stronger, more powerful. That when you do the simpler ways of trading, which is, like I said, simpler ways does not mean bad. That's, to me, they're the best. And the way I just showed you is one of the best ways to trade, in my opinion. With my experience, the way I've done price action, all this stuff, it's an awesome way to do it. And it doesn't take a whole lot of. You don't have to really fill your screen up with stuff with indicators and things like that. So, Well, that's it, guys. I'm going to end this this recording, but as always, you know, we'll touch base on this, and I'll ask for you guys' feedback in the chat section, and we'll discuss it and see how we go. All right, guys. See ya.